Knock, knock. Let's get me started. Jenifer is about to be here. But I'm inviting everyone in. The session will start at 5:30, guys. So in 10 minutes, the session will start. I'm just here bubbling it up. So go ahead and share the live, invite your friends to our first online home buyer session, question, interact with you guys online. Since COVID is still in play, and I can't have a face-to-face session. You see, I have well, this won't show properly. I have a very good class space where I could do, and this is within my office, where I could do a face-to-face class. And I have done face-to-face sessions teaching home buyers how to purchase a home and how to get you guys on track. But for 30 minutes. So starting 5:30, we will get started. Now, if you guys are coming in, you can just log in and log out, but make sure you're in at 5:30. So go ahead and share the live feed for a 5:30 session. Just wanted to make sure that this is working. Hello everyone, thanks for checking in. The live won't start, the session won't start as yet. So go ahead and invite your friends, invite your family. We're getting started at 5:30. Hold on. So if anyone who is anxious and have their question and need questions to get answered right away, feel free to go ahead and type your questions. I'll just go ahead and jot them down right now and address them immediately. Who is that, Mr. Todd? Again, our live will start at 5:30, so whoever that's checking in, who's tuning in, go ahead and share the live. Share my live, invite your friends, whoever that you might think that's interested in buying a house. I have a mortgage lender coming to you live at 5:30. So 5:30, it's counting down. Go ahead and share the live. Invite your friends, invite your family on over, tag them in. It's buyer home session. I'll be right back. So go ahead, share the live. Share my live, invite your friends. I'll be right back. Jenifer is here. We're just gonna, again, teach you guys and answer any questions that you have. So I'm just here setting up. Let's see. This is Jenifer. Will this be like that? The session will start again at 5:30. 5 minutes. So go ahead and share the live. Invite your friends, invite your family. Whoever that looking to purchase a home 2020, 2021, 2022, or just have any question in buying a house, feel free to just tune in. Any question you have, feel free. But I'll be right here. Share the live. We'll be on 5:30. It's 5:30 on the dot.
Oh, we're good. We're good.
Are we good there or let me see.
Turn sideways.
Turn sideways.
Wait, it's rotating.
It's rotating. Will that work?
There it goes.
But we have this screen going that way. So we're not going to be able to
see it.
read. Yeah.
We'll just have to share.
Just share. Okay.
Don't mind us. We're trying to get ourselves situated. Figuring this one out.
Okay. Since this is my live,
Oh my lord.
since this is my live feed, let's start off with on my yeah. Since it's my live feed, let's let Byron do the introduction. Hi, Byron and Jen. Hey, Carrie, how are you?
Hey.
Hey, guys. Byron Somers here with Next Home All American. I feel compelled to reach out to Jenifer. Actually, she has been reaching out to me as well, saying, Byron, what's going on? We haven't been able to get in a class in a while. So we go back and forth. How can we get this done? I have lots of home buyers, first-time home buyers, who have been reaching out as well, asking, hey, when is the next class? Who knows? Who knows when school is going to open? So with that says, if the government can't tell us when school is going to open, how can I tell you when I can have a class? So since we have a little issue with that, I figure let's put together a live feed, a live stream, where you guys can interact with us from your own comfort of your own home. With that says, again, my name is Byron Somers with Next Home All American. I have been a realtor in Central Florida for the past 17 years. Original descended from Jamaica, Jamaicans. I met Jen, a mortgage lender here who lives centrally located. I met her, I would say, 7 years ago and been doing sales with her. She has been helping me along the way in the financial prospect, helping me and my buyers. When I said she helped me, she do help me a lot. I am able to text her on the weekends and try to get you, the home buyer, qualified on the weekends. And I truly appreciate the work ethic that she put in. So with that said, I'm going to introduce you to Jenifer Hirsch. Take it over.
Hi, guys. I'm Jenifer Hirsch with Envoy Mortgage. Like Byron said, we've been working together for about 7 years. We do a lot of education with our buyers. Sometimes people are not ready to buy just yet, and it's getting them to the point where they're ready to buy. So I think it's a lot of teamwork, figuring out where we need to go and what path we need to take. I think our little live streams are going to be more geared towards questions and education and getting ready to buy. A lot of people are in the middle of getting back into the swing of things with this whole COVID stuff, and there's been a lot of changes in lending. So I think it's really good to educate our buyers on the changes, what they need to do, and put them in a better position to buy. Don't you think?
Absolutely. And I just noticed that one of my buyers just shared a live. It is important before we even get in there. Everyone that's checking in, go ahead and share the live, please. Just to invite, because I'm giving to you. You now check into the live. Go ahead and forward it on to your friends or family. Get it in your WhatsApp group. Share this live to your friends. Share it to your family within the group, and to all your whoever that you know who this could benefit. That's what this is all about.
It's just all about education.
All about education. Education. Again, Jamaican here will have a total different accent, and if you guys just type in and say, hey man, slow down a little bit, you're moving too fast, you're talking too fast, versus Jenifer here, y'all probably gonna just understand everything that she's saying. Okay, so speaking of home buyer and first-time home buyers with lots of questions. The first thing I've been getting, because most buyers call me, Byron, I would like to buy a house. What's my first step?
Me. I'm the first step.
I will just talk to introduce myself and just ask, hey, where would you like to buy? What monthly payment you would like to pay and so forth. But guess what? I'm only trying to get to know you, to hand you off to
me.
To Jenifer. Because at the end of the day, it's all about the money. How can you purchase without the money? And here's the source.
Okay. So a couple things about financing. We can do this in a couple different sessions, but I think the most important thing right now is to find out what you guys think are 3 things that are really important to get yourself in a position to buy. So if you guys have any ideas, can you just type it in here and let us know what you think 3 things would be that you need to purchase a house? What are those important parts? Anybody? Anybody?
They're coming. They're coming. Credit. Miss
Yep, credit is one, definitely.
Charles. Correct.
Very, very good. 2 more. Yes. Yes, yes.
Charles is on it.
Charles! Credit, down payment, yep. So down payment would be considered an asset because you need to have money. So you need to have credit, income, and assets. If you have a job, you're doing great. We can work with that. If you have money, great, perfect. If you don't, we can work on getting some solutions to help you with some down payments. There's different programs out there, and the programs are a totally different topic. But if you don't have credit, you can't buy a house. And credit is something that takes time to do.
Francine says, credit, work, credit, money, which is job, credit, job, and some money.
Definitely money. So, what is this? Mitzi, good credit, 20% of the amount it cost. Not necessarily. Down payment is not necessarily 20%. You can have something as simple as 3.5%. There's even programs out there where it's 0%. We just closed a loan for Miss Sabrina Jones, 0% down.
100% financing.
Yep, 100% financing.
And not just Sabrina. We closed several in Orange City. Several in Orange City. Yes.
You know who I'm talking about.
Yes.
Oh my God. Yes.
Gooseby.
Oh my gosh. They were elated because they got money back at closing. So there is programs. So yes, definitely good credit. When we're talking about income, we have to remember that there is things with financing. Debt to income ratio is a big thing. So if your debts, credit cards, car payments, student loans, judgments, any of that outweigh the income you make, we've got to work on some stuff.
Yes.
So it's all stuff that we go through. Your credit right there is huge. Huge.
I want money back at closing, Charles.
We're working on it, Charles. We're working on it.
How much do I need for escrow? Randy.
That's your area. You do your escrow.
Randy. Randy's my neighbor. And he's
oh, is this Randy?
This is Randy.
Okay.
This is Randy. Randy, we normally take a seller will accept $1,000. $1,000 we will get your escrow deposit and get you going. Yeah. At work, but listening. Miss Somers, credit score should be.
Okay. I'm glad somebody asked that because this handy dandy little paper that I've got right here, if everybody wants to either email or IM or whatever to Byron or myself, I'll send you this information. I'm going to give you a scenario. We're going to have 3 buyers. Charles, maybe you can fit in that category there. 3 buyers looking at the same house. The purchase price is $200,000 and the taxes are $1,200 a year. Okay? So if we're going to go FHA, we're going to get 3.5% down. Buyer A has a credit score of 598. That's pushing it, barely qualifying, but we're there. We've got all areas working. With that buyer, their payment is going to be $1,310. That principal and interest is $995. Remember that number, $995. Buyer B has a credit score of 640. Same house, $200,000, $1,200. Their payment is $1,253. So a little bit less, going in the right direction. Buyer C has a credit score of 685. So we're up there now. We're doing good. Their total payment is $1,198. From $1,310 to $1,198. In our world, it makes a big difference on a purchase price of a house. Because at that $598, you may not qualify for that house. You'll have to find something less. And we have a lot of people that say, I want a $200,000 house, I want a brand new house. And then all of a sudden, I tell them, debt to income ratio doesn't work. Right. Because their credit score makes it unobtainable.
We got questions coming in. Jessica Fisher, she asks, so what if the only thing you have is student loan and they are an income-driven program?
Okay, that's something that we can talk about because there is different calculations and different programs have different calculations for each of the payments. Some of them are 1%, some of them are 0.5% of the total balance. That's something definitely we could get into. Just having student loans is fine. It depends on where your credit score is at that time because you may not have enough established credit. And it might be simple as getting a credit card and paying on it correctly for 2 months to shoot your score up. So that's something we can definitely work with. So Lynette says...
Where's Lynette?
Lynette said if credit is $600 but you have $20,000 down. Okay, so in that situation, we are going to take a look at, is it better for you to get rid of some of your debt or bring your score up and keep some of that $20,000? There's a lot that goes into that because it's not always beneficial to put down $20,000 if you don't have to. I have a scenario today that I spoke to somebody about. They wanted to put down $20,000 because they wanted a lower payment. It didn't make financial sense. It made more financial sense for them to take the extra money that they would have used and put it towards their payment, where that payment was different. It was $45 difference in payment to not use that $20,000.
Lynette, mind you, you only have to put, for FHA as a first-time home buyer, you only have to put 3.5% down. So if you are good with your credit score, come on, let's go. Someone else, I missed I think Fisher says, I am at 685 in the credit score.
Yep.
Another thing I want you to touch on for some of our buyers who look at Credit Karma. Look at her respond. When you look at Credit Karma as it's hard to touch there, right? It is. But a lot of buyers would come to me and call me up and say, Byron, I have decent credit. What's your credit score? I'm at 650. I'm like, 650, you're right there. You're good to go. Where did you get this information? Credit Karma.
He says, call Jenifer.
Then I'm like, I need to get you with Jenifer because it's somewhat always different once a mortgage lender pull your credit score. And that's why I always say, hey, get education. This is why we're here. So Jenifer, want to touch base on that?
With Credit Karma, with the credit cards or banks that give you a credit score in relation to what card you have with them or what service. They're going to give you a general idea. The general idea is usually based on what that is utilized for. So if you have Capital One and it gives you a credit score of 650, it is taking a generalization of your credit usage. It's not your mortgage score. You can go buy a car, they can tell you that your credit score is 660, and then you can go apply for a mortgage and your score is 640. It's a mortgage score. They're analyzing it on everything that you've had. Credit cards are just analyzing on how much utilization you have and how you pay your cards on time.
Questions are coming in. So Sabrina Collins asks, what's a good credit score?
I would say where we would say 660 is good. Anything under 660 to 620, I mean, 620 is now a baseline. Where 580, it's really difficult to do 580. Interest rates are astronomical at that point. You're usually paying points. FHA is, with COVID, having a little bit more tightening of their guidelines. Some lenders can do it, some can't. But I would say 640 to 660, we can work on some stuff. 660, you're good on up.
Okay.
Jessica says, I hate Credit Karma.
What about classes for first-time home buyers?
We're trying with the first-time home buyer classes again. We're trying to get there. With COVID, we're still not able to really get a bunch of people together. That's why we thought this would be educational, because you can always IM us, text us. We can send out my business card, Byron. We'll give you the information. I have a full packet that I do for our classes, and we can actually meet one-on-one if you want. We can do a phone call, whatever it is that's going to make you comfortable until we can get those classes back together.
How is this score determined for mortgage? Because I was told the credit score 688 I see on my credit report. Is that the score you use for mortgage?
Because I was told the credit score
688.
It depends on who pulled your credit score. They told you that it was a 668 or 688. Sorry.
Yeah.
So whoever pulled that, it depends on the entity that was pulling that. If it wasn't a lender, that possibly could not be your credit score. It could be up or down. If somebody's told you had a 688 score, there will be a little bit of a variance, but I would think you would be in that realm of 660, 688, somewhere in there. You're going to be okay.
What if medical bills are the makeup of one's credit? No eviction, no car loans, no credit cards.
Okay, so if you have strictly medical bills, it depends on what you have that's revolving. And that's a really good question, because I always tell my clients, and there may be some clients that I have right now that are on this live feed, if you have medical bills and collections and stuff like that, and you have nothing that is positive right now, no auto loan, no credit cards that you use and keep the balances down and make payments on time, if you have nothing to combat that bad credit or the medical bills, if there's nothing positive, your score is going to stay lower. I have a gentleman right now that his score is low, but when I did his analyzer, if he was opening up 2 credit cards and utilized them for 2 months, his score was going to jump 160 points. That's crazy. So it's really important to understand that you have to have good credit to outweigh the bad credit.
Are there any programs for essential workers?
There is stuff out there for essential workers. A lot of times the benefit of the essential workers may or may not outweigh what programs we have. It really depends on what you're going to qualify for at that point.
Do you work with veterans?
Absolutely.
We love veterans.
My husband's a veteran, so thank you for your service if you're a veteran.
Randy, we love veterans. Okay? Okay.
Randy, we need to meet.
If credit is 600, but you have, we went over that. Lena Thompson. Okay, I think that's for most of the questions that's in the feed. Can school loans hurt you when trying to apply for a bank loan?
Not necessarily.
To buy a house.
Not always. They don't always hurt you. It depends on how it's structured. I do have some people right now that have extremely large student loans. So we need to make sure that everything is reporting correctly with your student loans.
Okay.
Anything else?
I think that's all that's within the live feed for questions. Guys, I have 61 of you guys in the feed. Feel free to ask any question. I'm here with a mortgage lender again. My name is Byron Somers. With Next Home All American. I've been your Central Florida realtor for the past 17 years. I love what I do. I truly enjoy what I do. I've been doing this full time for all this time, and this have been a blessing. It's have been a total blessing to me. And with that, with the blessing, I'm here to try to give back, teach, and let you know how I can get you into a house. Stop having you under the rug and not knowing what the first step and where to go. The first step, again, I usually hand you over to a mortgage lender. And that's why I invite Jenifer here. And I see more questions coming in. So, Jenifer, I'm going to throw this over on you. And then, does secure card truly help? And can you touch on trade line? Are they positive towards credit?
Okay, so I saw one question. Who was it? It was from, go back up to, let's start here because I saw that Lynette came in.
If you got good credit, but your spouse
okay,
no
so
credit.
if I have two borrowers, a husband, wife, whatever, I need to have one borrower that has credit. The other one, that's fine. They may not have credit. There may be a way to help him establish credit to put you guys in a better situation, but we definitely can work with that. Absolutely. Do I need a down payment with a 790 credit score? I already own a house for 20 years, but would like to get a bigger house. Yeah, well, technically yes. I would say at least 5% down if you're going to keep that house as well.
Right. But if she needs a bigger house, sometimes depends if you still have FHA financing. Because if you want to go FHA,
we have to sell that house.
Right.
You can't have two FHA loans at the same time.
Right. If you want to go FHA, possibly if that house is conventional, then we can move forward in doing so.
Absolutely. Yep.
And is it possibly because there's I'm just going to throw this out there.
Okay.
There's a 3% conventional loan as well.
But you can't have owned a house before, or at least in the last 3 years.
Okay.
Remember, first-time home buyer is only a term. First-time home buyer means somebody that hasn't owned a home in the last 3 years. So if you owned a home 5 years ago, you would be considered a first-time home buyer. Right. So you could do that 3% down.
Okay. Okay.
What else we got? What was that? Go back up. There. Chanel. Can late payments hurt, and how long should you wait after late payments? It depends on what your late payments are. Yes, late payments will hurt you. Again, let's clarify what a late payment is. If it's on a credit card, it's anything after the due date. Okay? Car payments normally allow a 15-day grace period before assessing a late fee. Then they will report after 30 days to the credit bureau that you've been late. So on some of your analyzers that you're using, like Credit Karma and stuff, if you haven't made your credit card payment, you're going to see your score drop. So you could definitely, late payments can hurt you. The time frame, it really depends. It depends on how big of a hit it took to your credit.
What if you have 640 credit score and your husband have 721?
I think we're dealing with that right now. We would go off of the 640 credit score. You can still do a loan with 640 credit score, but there may be some things that you want to do to increase that 640. And who was that? It was Carrie and who?
Carrie and Gil.
Okay. Yeah, you definitely, we can use both of those scores, but you always use the lesser of the two scores. So if you have a 740, 640, we're going to use the 640.
What is the average loan amount approved for someone between 650 to 675?
Okay, if I have any clients on this right now, they can tell you the first question that I'm going to ask you, because it makes the biggest impact on your buying, is what payment do you want? Because on paper, you can show me that you make and can afford a $2,500 mortgage payment. But when I look at your bank account and it tells me that you shouldn't buy over $1,200, that's when we're gonna have a discussion. If your debt to income ratio doesn't allow you to buy that $2,500 payment, we need to know what you're striving for.
Correct.
Okay, so you can show me on paper you're making you can afford a $2,500 payment, but your spending habits say $1,200. We need to know what's going to be comfortable for you. And what I've seen a lot is a lot of people are saying that they're paying $1,400, $1,500, $1,600 in rent. They don't want to spend that much. They want to own a property and make a mortgage payment that's not going to be so harsh for them.
Did you answer how long do you wait after a late payment to apply for a house?
It really depends on how bad it hit their credit.
Okay. I have a house, but looking into buying a bigger one. Question, someone asked a question, do we regularly go live? How often will we do this?
I think we're going to be doing this once a week now.
We're planning on doing this once a week, guys. Hopefully we can have it a steady day, but as you know, I'm in real estate. Someone could call me and say, hey, I want to look at houses in Orlando or in Daytona or even in DeLand, and I schedule it at 1 o'clock, and my 1 o'clock appointment could take, and then I show them a house and they want me to immediately write up a contract. So we are going to try to do it every week, and I will update you on the date and time as the week goes by.
We'll kind of look at our schedules and see what we think we have planned.
Right.
I do attend all my closings, so
we attend all of our closings.
Yeah, we end up with you the entire way. What else did you get?
Our trade line effective, helping credit.
You want to have trade lines. You want to have time on trade lines. If you have too short of time for your trade lines, your credit may not be, as high as you want it. If you have trade lines that you close that have been for 20 years and you just decide to close it, it could hurt you. So there's a lot that goes into your credit. And that's one of the sheets that I do have, is the main factors that go into how your credit score is calculated. And it actually states in here that your mix of credit accounts and how long the history is makes up a big part of it. They want to see how you've made payments over time. So if anybody's thinking about closing out their accounts, don't do that. If you want to buy a mortgage or if you want to buy a house, don't do that. You'll hurt your credit by closing out your accounts.
Yep.
And I do help. If you want information on credit or what we look for in lending, please reach out to me. I will help with questions all the time. We've had clients that just needed to help build and get on the right track, and we do that all the time.
Mm-hmm. Charles asks, what if you were gifted a home? Mm-hmm. Would you still consider a first-time home buyer?
You have ownership interest in that property. So yes, you would still be considered a homeowner. So you would not get the benefit of that first-time home buyer because you have your name on the deed to a property. So,
but he still can go FHA 3.5%
he can still go FHA
down?
Mm-hmm.
Yep.
Absolutely.
Okay.
As long as he doesn't have an FHA loan, he can go FHA.
Okay. Okay. Anyone else? I think that's it for the questions. We're at 5:59.
Nice.
We're at 5. But the live is going strong. We're at 5:59. As we said, we were going to do this for 30 minutes. if there's any further question, there's 50 of you guys in this feed, in this live feed.
Is putting somebody else on my credit helps boost their credit? So yes, if you have somebody that has strong credit, they have a credit account that is not high utilization, good payment history, it is definitely beneficial to be on their account as an authorized user only. At that point, you'll get the benefit of how they make their payments and how their credit is scored along with yours. So that does help.
Good. No further question. Okay, we got 53 people again on this live. If you all have any question, that's what we're here for. I could extend this for what, 5 minutes? It's 6 o'clock, guys. We had intended to get this done in 30 minutes. So if you all have any question, go ahead and send me an inbox or email. We're gonna stick to our game plan for 5:30 to 6 o'clock. So pretty much that is it.
We have 2 gift cards.
Oh, gift cards.
We'll do 2 gift cards to see kind of who was paying attention.
Okay.
And interacting actually too.
Very much so.
You wanna look through the feed.
Charles. Yeah.
Mr. Charles.
he was all Charles. It's between Charles and Mitzi.
I would
Mitzi
think so.
was going.
Yep.
Mitzi was going.
So you wanna just do those 2 because they were the most interactive this time, and the next time we'll do questions?
Sure.
That'll work.
Yeah.
So we just need an address.
Okay.
And I will mail out the gift cards to you guys tomorrow. So you should have them by the weekend.
Okay. So Charles and Mitzi, if you guys haven't logged out, you guys have won a gift card for today live. Jenifer will mail it out to you. So go ahead and inbox me. No, not you, Randy. Go ahead and inbox me your mailing address and we will get that out to you.
Yep.
Okay.
Absolutely.
So thanks everyone. Thanks. You're welcome. Thanks everyone for tuning in. It was
joining us, definitely.
Wonderful. Again, next time, come with more questions. Tell your friends. It's great.
I think next time we'll talk about payment, kind of deciphering payment, what goes into making up a payment, how you figure out what you can afford.
Someone just asked a question.
What?
I'm interested in buying. The last question. I'm interested in buying. What's the criteria? I mean, that's like.
Okay, to buy a house, the 3 things we said, you have to have credit, income, and assets. That's your criteria. And then once we figure out your credit, your income, and your assets all together, we'll be able to figure out what you're qualified for.
And just to wrap it up, what will be, say, a good starting credit to buy?
I would strongly suggest 660. 640, 660 is there, but we want to try to get you as strong as you can because you want the best interest rate possible. You want the lowest payment. You want to be able to afford that $200,000 house versus an $180,000 house.
So if I have a 660 credit score and I'm ready to buy, what would be my down payment as a first-time home buyer? Just say what percentage would be my down payment as a first-time home buyer going FHA?
So you've never owned a home in the last...
Never owned a home. I'm a first-time home buyer.
So 660 credit score.
660 credit score, first-time home buyer. I am buying. I want to go FHA. What will be my down payment? Not saying, even for example, at a $200,000 purchase, what will be my down payment?
Your down payment, 200. Well, all you got to do is
3.5%, guys.
200 times 3.5%.
That's $7,000.
There you go.
So I will need $7,000 as an asset, not under my pillow, not in a round robin for Jamaicans.
Oh my goodness. I was introduced to the round robin a couple years ago.
Not in a round robin, not in a partner draw or anything like that, guys. You will need to have that money in the bank at least 2-3 months or more.
If we happen to have the round robin money.
Or partner
the,
draw. Partner draw.
Sure. Or outside in the backyard in a pot buried in the ground where you hope you remember where it is. We need to have that discussion on how long it's going to take and how to put that money in the bank so that you can use it. Because if you come to me and say, I'm going to bring my $7,000 to the closing table, the title company, Byron, and I will all look at you cross-eyed and say, where did the money come from?
Yep.
We'll have to figure it out. But there's a million different ways to go ahead and figure that out. It's just a conversation and it's education.
Very much so. And last, I'll answer you, Ms. Murphy. Yes, your interest and principal will be in your monthly payment. The only thing that doesn't go in your monthly payment if you're in a association and you have association dues, association fee, that's what you pay separate. But you will only have one monthly payment and it covers everything. It covers your insurance, your taxes, and all the good stuff, and your principal. So that's just about it. I must say thanks to Jenifer for coming out. Should I say it's our anniversary and I got her out here. It's our anniversary, guys, and I got her out here.
Yeah.
So I really appreciate you.
Thanks.
Thank you.
I appreciate it. I love our teamwork.
You got it. All right, guys. Bye. And
bye, guys. Have a good evening.
Have a good evening. Thank you guys for tuning in. I hate to, sign out from 51 people, but we're busy. We got things to do.
Bye.
Bye.